Happy hump day to you. Today is Wednesday, January the 15th, 2025. Almost said 2024. But you are watching the John McEntyre Money Show live. I'm John McEntyre. Today we're going to finish up what I was talking about yesterday with achieving financial success in 2025. It's I was talking about being properly insured. And so I talked about the life insurance, and I talked about life insurance. I talked about health insurance. And then I have a couple more to cover here. But before I get into that, I had seen a study, and we also do our studies. Also, when we're talking to, we have clients in different age groups, genders, mainly women. Probably 75% of our clientele are women. Even viewers, everything, pretty much across social media, and in other areas of marketing. It's the women that responds the most. But we do have, all of the different age groups. And one of the studies we've done, and I read studies and research all the time. It was talking. The study was about who had the most financial stress, and um, normally it's always been like the women because in whether they're in the corporate or they're a homemaker. Um, they're usually at the top of the list with financial stresses and the most concerns. Mainly, if they're in the corporate, they're sometimes they're the big breadwinner, or they make a lot of money and they need to know what to do with it. Make sure that because their concern is you know stability as they age. So financial security is huge. But and then if they are, for instance, a homemaker, um, they have to run the home finances. So they have the concern of making sure, because they're looking at every area. We have to take care of the kids. We have to send the kids to college. We have to pay for this, pay for that, everything. And so it was the women. Other surprising that they were number one. Number two were Gen Zs, the Generation Zers, and that's the age group 18 to 28. They were number two, and I was a little bit surprised about that. Um, but all of us, we do have money concerns. Both of them, pretty much all the way across the board. It was the debt, rising costs of living, housing, things like that. More specifically, with women, it was basically the high cost, and as they aged, that really became more and more healthcare, you know, housing costs, and everything. Gen Zers, theirs was student loans. They're carrying a lot of student loan debt and a bleak job market. They were concerned about the job prospects out there. They just aren't confident in the actual job market that they will be leaving college going into, or just as they age and they're ready to get a job, they're just not confident. They just don't see um, jobs with high promotion probability, um, income increase. They feel that they will have to settle for more like minimum wage type jobs, service jobs, things like that. um, and so those are some of the major concerns. Well, that's what we address here on the show. All of that that's concerned, because money, it touches every area of life, and that's why we talk about that. And I just wanted to release that because the study was released today, and it's being talked about across the board. It's different companies, research firms doing all of these, different studies, and so I tried to read them, and these were some of the actual, um, each one was basically saying the same thing. So I just wanted to address that before I moved on into actually finishing up about insurance, being properly insured. So yesterday I talked about insurance being part of your foundation, and that you need to get it sooner rather than later, because it's not a step in your financial plan. It's actually the foundation. It's part of the foundation of financial plan. And so you don't wait. The sooner the better when it comes to insurance. Like I was saying, it's cheaper when you're younger. It's cheaper. um, and if you get a good policy early, it's definitely going to save you money. 'Cause like I was sharing, the policy that I have now that I bought 20 years ago. It's all If I bought it now, it would be double, at least double. And all of the things I had to go through. I mean, I've shared it talking about the life insurance, what I had to pretty much go through, because I was in good shape and everything to look at me. But um, the way that they have everything set up, when they're the actuaries, they have it set up that, as far as they was concerned, I was obese, even though my body fat, had my body fat tested. I went before I bought insurance. I went to a company. They tested my body fat. They tested everything. Went to the doctor, made sure I was very healthy, and my body fat was at 10%. But as far as they were concerned, I was obese. And so the guy that came out to my house to finish up the underwrite, he called in and told, he had to basically sell, this guy is healthy. He's standing here. He has a 29-inch waist. He's wearing a 42 jacket, and he's healthy. So those were the things, and it really opened my eyes to how they grade this, with life insurance. And so that's why, the younger and healthier you are, the better off. Because, he showed me the chart. LeBron James was considered obese. It's one of the, healthiest athletes in the world even then. And he was, younger then. And I was like, there's not an ounce of fat on that guy. And they was like, yeah, it's these new charts. And so hopefully that helps you understand why it's better to buy life insurance when you're younger. Some people, they wait till their 40s, and they may have the money to afford the premiums, but then they look at it and they're like, man, I should have just went and bought this when I was younger. um, that would have saved half. I was like, yeah, there's somewhere else you could put that money, half in life insurance. As you get older, the premiums double, and which can be extremely expensive also. And so that can affect, retirement savings and other areas, healthcare, all of this. And so that's why it's so important. Then I did talk about health insurance. We all know the importance of having health insurance, especially now. Um, I have a lot of friends, doctors, nurses, a lot of people in the hospital system, and they're like, we're all almost filled to capacity, even the urgent cares. And they're putting up um, like signs on the doors saying, even if just to be a visitor, you can't have a cough or whatever. You have to be healthy just to visit your sick relatives or friends or whatever. And so that's how serious it's getting. And that means there's a lot of uh, healthcare claims. And so we know the importance of having health care. It is the lack of health care is the number one cause of bankruptcy in America. So those are the cases for those two insurance. Third insurance is one that some people know about, and it's like all insurances. You really don't think about it until you need it. And this one, a lot of times, it's not even on people's radar. And it's disability insurance. You know, um, a person, what is a person under 60, they have a higher chance of becoming disabled than actually dying. Whereas I think like 1 in 4, you have a 1 in 4 chance of becoming disabled before you would actually, die at a younger age. And so disability insurance is extremely important, because especially if you are the breadwinner, then your home depends on your income. You become disabled, you no longer have income. There comes the trouble, the financial issues. Even if you did have 6 months of savings, for your emergency fund, and you had your sinking funds and all of that. Um, a short-term disability, which is usually 3 months, around 3 months. It all depends on the situation. Um, Maternity leave for women, that's considered like short-term disability because they, have to be with the baby, and they're unhealthy. They went through childbirth, which is very serious. Um, that's considered short-term disability. But then most of the disability comes from injuries. Um, and I mean, I have some serious stories of people that became disabled. They were professionals, they were business people, and they, out on RVs, ATVs, and just playing sports, playing basketball. One of the big stories, a friend of mine tore one Achilles tendon and got healed. 6 months later, playing basketball, tore the other Achilles tendon, and so just so happened he didn't have to go on disability because he was a professional, and so most of his work was computer and everything. And we were talking about that. He was like, "Yeah, I'm going to get that disability insurance." He said, because that could have easily been ugly. I was like, yeah, almost a year of not being, not walking because he 6 months he was coming out of the cast of the one Achilles, and he was, he wasn't even doing anything major. He just tore the other one. It just weakened. I mean, I guess it was overstressed, and he tore the other one. He was like, if I was in a job where I had to be on my feet, and walking and being mobile was um, high priority in my job, he said I would have been in serious trouble. He said, 'cause I wouldn't have been able to do the job. I was like, yeah. And so disability comes into the picture in those types of situations. Then also for people, even the ones that aren't in the workforce, but they are just as important, i.e., the homemaker, whether it's the wife or the husband, one of the spouses that stays at home. Um, they can't do their work. That means they can't handle housework. They can't do the grocery shop. They can't do all those things, take care of the kids. They become disabled in a certain way. Then they have to be covered because someone would have to be paid to be brought in to take care of those situations, to take care of all of those errands and everything of running the household. And so that's the importance of disability insurance even over there. And that's something that most people don't realize. They think, well, I don't work, I don't need these insurances. Yes, you do, because even though you don't work in the traditional sense, your role is still extremely important. The breadwinners out, out in the workforce, they can't run the home and be in the workforce at the same time and take care of the kids and all of this. So someone has to do it and take care of home and do all of everything else. So yours is just as important, if not more important. Um, a couple of studies had been put out that if they put an actual salary for the homemaker, the actual salary, everything that they do, is a six-figure job. It's actually a six-figure job. So your career, you have a six-figure career. Over work life, you earn a few $1,000,000 yourself. You're doing a multi-million-dollar job yourself. So there you go. That's why disability is so important. Um, if you were with an employer, most employers, they offer it, and sometimes it may not be enough. It may not be enough to take care of everything, and you look at the uh, the amount of disability insurance that you have. Just like with life and health, it may not be enough. You may have life insurance at your work, but it may not cover everything if you passed away. Same thing with disability insurance. You may have it at work, but it still may not be enough to cover your lifestyle, because most disability insurances, they don't cover 100%, because a lot of people, they would try not to come back to work. it covers 60 to 70%. And even in that case, some people they have their expenses low enough to where that's covering things at home. And so they're like slow, they drag their feet and get back to work. And so disability doesn't cover 100%. You can't insure yourself to up to 100% with disability. The highest is, like I say, around 70-80%. And so that's why if you do have it through your employer, good. If it's covering 60-70% of your everything to run your life, then good. If not, you may need to purchase more. And if you're not working somewhere that offers disability insurance, it's time to look into it and look for coverage up to 70%. Um, with a benefit period of at least 5 years, because some disabilities last longer than others, much longer. That's long-term disability. And some that can't afford it, they even buy it and pay for it, that it would cover them up to age 65. They was if they're in the workforce. And so there's other things you would apply for disability outside of work and everything like that. But hopefully you see the importance of disability insurance. So 60 to 70% of your income covered, at least 5-year benefit period. That's the minimum. Aim for that. All right, so that's disability insurance. The next one, these are the more, just like life, these are the more, everyday insurances that everyone thinks about. One of them is home insurance. Your home insurance. Um, if you're buying a house and you get a mortgage, you can't get the mortgage without home insurance. And that's to protect the mortgage company, and that's to protect the mortgage. That's not to protect you. That's to protect the lender that gave the money. So if something happened with the home, and the home is usually it's insured on replacement cost, or at least the mortgage, whatever they loaned out on it. That's the amount that they would want you to have insurance. Um, and most of the time you hear it called mortgage protection, things like that. Um, if you do have that insurance, that's to replace their amount, to give them their money in that particular time. So if the house is worth $300,000, they want at least a $300,000 policy, and something happens, they get their money. You don't have more insurance than that, you just took a loss. So you want to buy a home insurance that would cover the replacement cost of your home, along with personal items. So if it would take $600,000 to $300,000 to build your home, and then inside your home, hopefully you've done a a I can't get the word out right now, but you've done an assessment um, of everything in your home and the actual value of everything. If it adds up to another $100,000, you need at least $400,000 of insurance, of home insurance, to replace the home, rebuild the home, and replace all of your lost stuff. Because a lot of times, when in real estate, when I've dealt with people that went through fires and things like that, and it was like, it really is not the home that I can replace the home. I do miss it. I raised my kids there. I did this there, but I lost some valuable furniture. I lost some family heirlooms, things like that. They weren't protected, and they're basically priceless. Those, they can't be replaced. Because maybe it was passed down or something like that, and you can't find that in a store. You can't go out and buy that type of stuff. So you at least want to have it insured to a point to where it would soften everything. So that's something to really, really, really think about. And like I said, I've said it time and time again, and I will keep saying it. As I would walk into these homes, these people, in real estate, as they were ready to sell or something like that, or visiting a potential buyer, and stop by their apartment or where they were renting at the time. And I'm like, you already have about $25,000 worth of personal belongings. You haven't even bought a home yet. and then they're not looking at it as being valuable. And so that's why you want to have inventory. That was the word I was looking for. You've done inventory. Do your inventory. You can even have a personal appraiser, personal property appraiser to come out and walk through your home and help you to appraise it correctly to get it. Most time that would carry more weight with the insurance company anyway to have that done. So if you have valuables, um, jewelry, the wedding bands, the wrist watches, things like this, the other jewelry, necklaces, things that was passed down, diamond earrings. I mean, I heard people, losing, you know, the grandmother passed it down to the mother, that passed it out to the daughter, and it was like, diamond necklace and matching earrings, things like that, and it was lost. And I'm like, wow, yeah, um, that's worth way more than a house. So you want to take that into an account. And also the replacement policy, you want that type depending on disaster areas. Like right now we're going through West Coast fires, the huge fires burning down these luxury homes of celebrities, people from blue collar all the way up to celebrities, wealthy athletes and actors, actresses, entertainers losing their houses. That's a different type of insurance. Those are disaster type insurances that you need to take in place. So if you're in a disaster prone area, that type of insurance is very important. Okay, over here, we're in North Carolina. They're still rebuilding up in the mountains from Helene, even down here, even close to Charlotte. There's a few homes that was affected here. Um, Maybe the houses weren't flooded. Maybe they were just swept away. That's a different type of insurance. That's disaster insurance. The house wasn't flooded; it was swept away. Property was, like it's just gone now. You know, Flooding, how the structure is still there with water inside. That's flood damage. This is different type. Some fires, things like that. Like I say, on the east west coast, the fires. So you have to take all of that into account when you're buying an insurance policy for your home. Take that into an account. Last but definitely not least, of the important insurance is the auto. And everyone knows, as soon as you buy the car, you have to, put the insurance on it. You're supposed to. Um, I saw a statistic in North Carolina: 18% of drivers on the road are uninsured. Not improperly insured, they're just uninsured. They have no insurance at all. And that means if you're in a wreck accident, they're involved. You're going to have to sue them, either file the claim on your insurance, even though you were not at fault, or you're going to have to sue them and they may not have anything. The car may be the only valuable they have, or they may have just a few things that definitely would not cover your costs. That's why auto insurance is so important. Things happen and you want that, or it may be like a some major damage happens to your auto. So you want that to be covered, at least $500,000, especially in today's time, because and more if you have considerable assets. And the reason why I say that, if you're in an accident, you're in a car accident, it's your fault. Um, Most of the time, well, not most, there are attorneys out there. Most people that have been in accidents out there, especially with cars or received tickets or anything pertaining to traffic, you get the letters. And the attorneys, they come out of the woodworks and, hey, you could sue them, this, that, and the other. You could sue them for all of this. And all you have to do is say sue and a lot of money, and the client is in there, and the attorney is going to try to come after it. So if you don't have enough insurance on your car to pay the actual lawsuit, then they're going to come after assets and make you sell everything. You have to have a fire sale to pay everything off. So, and you also want comprehensive and collision, unless you have an older vehicle that you could replace with cash, or repair it cash, whatever. But if you have a luxury car and um, it's $70,000, you're in an accident, you don't have enough insurance, do you have the money to pay to replace the car or repair it? That's what you have to keep in mind. You don't want to have to go into your emergency funds and everything for these types of things. We could just insure it to make sure it's taken care of. So hopefully that helped today. I was just finishing up talking about insurance. Yesterday was life and health. Today was disability, home, and auto. And also with the home and auto, where you can save money is bundling. Bundling does save money. I get that question a lot. People are like, is that like just something to get us to call the companies or whatever? Oh no, you do get a discount. We have things bundled. We've always done it that way, and it is a considerable savings. The insurance company will give you a good deal for having all of your vehicles and your home, things like that, bundled up. So bundle it up, especially if you have young ones on the road. We know how expensive their insurance can be. The first time driver, they have no experience yet, things like this. Bundling helps even in those situations. When it was time for Bella to go on the insurance, I was like, man, if it was not for bundling, I was like, girl, if you had to pay your own insurance, you wouldn't have time to go to school. You would have to work all day. So that's just to say, make sure when it's this time of the year, I always tell people, look at your insurance, do a reevaluation, and it may be time to shop around. We've done it. We did it last year. Saved a good, a real chunk of money, um, doing a reassessment. So it could be time to do that reassessment. And if you don't, if you need help, contact us here. We'll help you with that. Our information is on the screen. So I just covered the insurance. Took me 2 days to do it, yesterday and today. I'll be back tomorrow for another topic. If you have any questions, um, ask them. Remember, we're live. You can call. You can contact us. We can talk about it live. If you have wallet wins, share those wallet wins. Hashtag wallet wins. We love to celebrate those. Hopefully, people are they didn't allow January 10th, which was National Quitters Day, which means people quit their resolutions. Hopefully, you're sticking with your resolution, and it has become more than a resolution. It has become a passionate dream of yours to achieve financial success. So, that being said, I will be back tomorrow, same time on YouTube, Facebook Live, 10 a.m. We'll see you tomorrow. We'll talk.